Certified on 5.
Oh, that's good.
Seller. Oh, seller.
Hey, pretty good. Yeah. No, well, yeah, I just came in and it was all ready, so. Is there lights?
Oh, do you mean like backlights or like lights which turn to like a
Oh, for the whiteboard?
Yeah, for the whiteboard, like the O'Brien. I'm gonna be passing around these if you could sign in. And if you guys need scratch paper, I kind of realized the first page there's not much room, or I don't know, the format, I don't like the format anymore, so if you need scratch paper, it's up here. The dry erase marker. I have some, but yeah.
So you're grabbing
Could you? Because I'm afraid this might run out.
yes.
I just.
Oh, you started?
Oh no, I don't think
Okay. There's also got a top.
Okay.
Yes, you need it.
This and MJ. I'm like, oh, I said, and I got the connect card.
That was pretty rough.
Yeah, that class, I got a solid C.
I did way better than I thought I was going to do.
Yeah, that's good. I knew I could finish with a C. That's what I know. It was higher than we did, but I wasn't taking anything.
I got a B. Yeah. way ahead.
It should be fine. I mean, can you guys see the whiteboard all right?
I'm so glad.
They can see it all right.
Like, I mean, this is probably closer to.
Yeah.
I'll look for, maybe there's a.
Not out of the woods this time.
Yeah.
I mean, it's so frustrating, like, counting, think about it, like, it
Yeah,
should
it's
be
not
really
worth it.
cut and dry.
Thanks so, thanks for trying. And thanks for coming to that Sunday. It's already done, so. Yeah, I'd rather the whiteboard because I have this information. So, but thanks, guys. Thank you. Okay, we'll get started a few minutes late. Thanks for coming, guys. I forgot my answer sheets. I'm gonna have to be calculating along with you guys. So maybe that'll slow us down a little bit so you guys can think a little. We're planning to stay here till 5, but I'm hoping to get us out quicker than that. No one likes accounting for 2 hours. So this first sheet, we've got all these different accounts, and in our exam we're going to have to be able to make an income statement, make a balance sheet with all these different accounts. The first financial statement that you make is the income statement. The income statement, we'll put our company name, I think it's Selmer or something. And it's for the period ending 12/31/17. So that's our title page of the income statement. It's going to happen all the time. Or that's the basic layout every time. I'll put the numbers out here so we have a little bit more room. Our income statement, we're usually used to having revenues minus expenses give us net income, but recently in class we learned something else, a multi-step income statement, so we have a few more things going on. But we'll always start off with sales revenue. Can you guys see right here? Sales revenue, we got $50,000. Next is our returns and allowances. So our returns and allowances are $1,000. So does that add or subtract the sales? Just blurt it out.
Subtract.
Subtract. Okay, there we go. And we're going to subtract $1,000 from our 50, which gives us our net sales of $49,000. If we had sales discounts up there, that would also subtract from our sales revenue, like the returns. So there's our net sales of $49,000. Next, in the multi-step income statement, is our cost of goods sold. Our cost of goods sold was $10,000. Do we add or subtract cost of goods sold? We subtract because it's an expense. Take our sales revenue minus our cost of goods sold expense to give us $39,000. Does anyone know what that $39,000, what it's called, the line item?
Gross profit.
Gross profit, there we go. If you're unfamiliar with these terms, it's more, you gotta just memorize them for the income statement at this point. We got our, okay, gross profit. Next is our operating expenses. our operating expenses are the expenses that we incur, like the day-to-day expenses that we need to do in order to do business. So some examples are utility expense, which is $7,000. Depreciation expense, which is $20,000. And you should notice that I skipped interest expense. Interest expense is not an operating expense, but I don't think, he said you guys won't have to differentiate what are operating expenses and what are other expenses, so don't worry about that too much.
What was that?
So our interest expense, we don't include in our operating expenses because it's not an operating expense. But for this exam, he said you don't need to know the differences. So he probably won't give you interest expense on the exam when making an income statement at least. So our total operating expenses are $27,000. So do we add that or subtract that from gross profit?
Subtract.
Subtract. There we go. So 39 minus 27 is 12. What's that line item called? 12,000. What's that?
Net sales? No.
It's not net income yet. Net income is after everything.
No, I said net sales.
Operating income?
Yes, whoever said operating income or income from operations. Either one. So our income from operations are $12,000. Now, I think that's where he stops for this exam. But to get our net income, we then subtract our interest expense, and then we'd subtract our tax expense, which are 9 and 2. So after all of our expenses, we get finally net income, which is 1,000. Any questions on that?
You said to get the income from operation, you gross profit minus operating expense?
Yep.
Okay.
Mm-hmm. Exactly. What's the next financial statement we make? Where do we use this net income number next? Yep, retained earnings. Perfect. So our statement of retained earnings, the title will be pretty much the same. It's going to say statement of retained earnings for the period ending 12/31/17. Oh, and put our company name. There we go. So pretty much the same title as the income statement. We're going to start with our beginning retained earnings, which are given $6,500. Then we're going to add what?
Net income?
Net income. we get from the income statement of 1,000. And then what? We're going to subtract what? Anyone? Dividends, yeah. Sorry if I didn't hear you. Dividends. In our dividends, we're paying $1,000 in dividends. Subtract. The parentheses means subtraction. So we're left with our ending retained earnings of 65. Any questions so far? What's the next financial statement? I think I heard someone say it. The balance sheet. The last one that we know. So the title is pretty much the same, except it's going to be a specific point in time, 12/31/17. So on our balance sheet, we've got our assets. What are our 4 asset categories? What's the first category? The category, not the specific account. Current assets. Current assets are things that will turn to cash within 1 year. So what's our first example of a current asset? Cash. Yeah. The obvious one. And we've got 40 in cash. What's our next one? Accounts receivable, yeah. It's accounts receivable for 30. And then we've got inventory for 7. I'm going to run out. What's the next category of assets? Long-term investments, yep. In this case, what's our long-term investment? Stock, yeah. If you notice, I'm going. It's in order, so it's not very tricky.
So that would be considered stock in a different company, correct?
Correct. Yep, and that's a good thing to point out. This is stock we own in another company. $10,000. What's another long-term investment? It's not out there, but there's 2 more that we really know. Yeah.
Be land over buildings.
Okay, land, yes. Not buildings, though. Buildings would be something else. And we'll talk a little bit about land in a few minutes. The other one is, yeah.
Long-term note payable.
No.
Equipment.
No.
County stock.
Mm.
Sure.
The other one, bonds. Bonds in another company, but we don't have any bonds. Yeah.
How is bonds different from stocks?
Good question. You don't really need to know that now. So, bonds is a stock is ownership in another company. Bonds is you're loaning money to another company, kind of. So, We got stock. So what's our next asset category? What was that? I didn't hear any of that. You might have said PP&E. PP&E, what's that stand for? Property, plant, and equipment. There we go. So there's our three categories of PP&E. Property, aka buildings, for 50. No, I'm sorry. Property would be lands. Plants would be the building. And we've also got accumulated depreciation on the building. For $5,000. Negative, because depreciation takes away from the value of buildings. There's our plants, and then we've got equipment. That's also got accumulated depreciation. Equipment is 75. And we've got 7,500 depreciation. We could also have land in the PP&E, but we don't have any land here. How do we differentiate if land is a PP&E or if land is a long-term investment?
If you're using it, or
Yeah,
If we're using the land, yep, would it be PP&E or long-term investment?
long.
It would be PP&E. If we're using the land in the business, it's PP&E. If we just bought land because we thought in 20 years it'll be a good investment, or we'll sell it in 20 years, it's a long-term investment. And then what's our last category for assets? Someone said, I think, intangible. And our only intangible here is patents. But we could have like goodwill or copyrights or trademarks. Patents is funny. Any questions with the assets so far? So you total all this up, and we have total assets. That'd be the last line in the balance sheet. How about our liabilities? You've got two categories for liabilities. What are those?
current liability and long-term.
Current and long-term. Yep. And what are our current liabilities here?
Note payables?
We've got a note payable. Yep. Note payable.
Short.
Short. Mm-hmm. 30,000. What else?
Accounts payable.
Accounts payable. Mm-hmm. For 50. And that's it. Oh no, just kidding. Wages payable. That's the WP. 10,000. And that's it. And then our long term. Obviously, we've got a $90,000 note payable. We owe $90,000 beyond a year. We owe $30,000 in a note payable within this year. So it can be both current and long term. There's our liabilities, and then our equity section. What's our two equity categories?
Common stock.
Common stock and what's the other one?
Retained.
Common stock and retained earnings. Our common stock here, 33. And then our retained earnings is what?
6,500.
65, yeah, we get the number from here. So all these financial statements, weave together. There's a number of sharing between all of them. So remember, this is stock. People invest and bought stock in our company. This is we're buying stock in another company. Any questions with the balance sheet? So you total this all up, you total all the assets up, total all these guys up, and they should equal. I won't do it now because I think everyone can figure that out. Well, we might need them for the financial ratios. So, let's see. We've got a few financial ratios. We'll start with the profit margin. Profit margin is net income divided by net sales. So what was our net income? 1,000, yeah, sounds right. And then our net sales was 49. Yep. So remember, it's net sales. It's not the 50,000, which is all your sales. It's we subtract the returns and allowances and subtract any discounts. So our profit margin is like 0.02 or something. .02. Or you can think of it as 2%. The profit margin is useful because if you wanted to say, what if we had $100,000 in sales, in net sales? How much would our net income be? How would you figure that out? You don't really need to know this, but does anyone?
2%.
What's that?
You make 2,000, you multiply with 2%.
Yep, so we take our sales times our profit margin. And again, if you're not following this, no worries. Yeah, 2,000. So you can, if you're hoping to get sales, or you're hoping to get $100,000 in sales, you can estimate what your net income will be. Or you can think of it, for every dollar in sales we earn 2 cents. No, I'm sorry, 0.02 cents. Anyone confused?
Where'd you get the 1,049 grand from?
1,000 is from the income statement. It's our net income, which is the last number we have on there. 49 is also from the income statement, which is on the top. We had 50,000 in sales minus our returns for 1,000. Yeah, I just made that up. Yeah. So would you want a higher profit margin or a smaller profit margin? Higher profit margin, yeah. Okay, earnings per share. Did he say if he's giving you guys the ratios, the equations? He is? Okay, so the math hopefully isn't too hard. I think what he'll test you on is your understanding of the ratio. Earnings per share is net income minus preferred dividends divided by the average number of shares of common stock. Yeah, and in you guys' fact pattern, it cut off all that relevant information. So what's our net income? Well, we already said it was $1,000 minus our preferred dividends. We have none. This is preferred dividends. We had $1,000 in dividends, but those weren't preferred. They'll specifically state preferred dividends, so don't get those confused. And then our average number of shares of common stock. In our additional information, we've got 8,000 outstanding in the very beginning of the year, and then 12,000 outstanding at the very end of 2017. So what's the average? 10,000, yep. And the way you figure that out is just a simple average. 8,000 plus 12,000 is something divided by 2. That gives us 1 or 0.1 or 10%. And this is a useful number to compare with other companies. Would you want a higher or lower earnings per share? Higher, yes.
Is that number only important to stockholders? That's what they make?
Is it only what?
Is it only important to stockholders because that's what they make, right?
Yeah, it's important to stockholders. It's not what they make, per se. It's not like their return. I don't even really fully understand it. It's just a measure of how much net income is the company getting compared to how many shares are out there. So if there's a bunch of shares out there and you're just one shareholder, you're not getting a good EPS, earnings per share. But if there's a few shareholders or a few shares outstanding, then you get a bigger slice of that net income. Even though you don't necessarily get the net income, but you get a bigger slice of their earnings. So, does that make sense?
Yeah.